Let's quickly delve into the rally that we saw within the banking sector. This mostly spurred by Barclays numbers that came through. And interesting, we saw profits down almost 24%, but we saw earnings per share rising 3.5%. Give us a sense on the sentiment when it comes to the overall banking space.
I think the market is reading a sense of optimism as far as banking stocks are concerned. And if you look at the Barclays results, if you strip them from extraordinary factors, then you could say actually that there was an improvement compared to same period last year. And especially when you consider the fact that, to some investors had actually thought that Barclays is more or less out of steam, the results have actually pleasant surprised the market. Now, when you consider the other banks that might not have had any extraordinary items, let's say in 2010 or perhaps even last year, looking at the same operating environment, assuming NPLs are okay and cost ratios are okay, we should expect even better results or similar results from the other banks. So we should expect the rally on banking stocks to continue.
Isaac, it's an important point that you make when you actually strip out those extraordinary items. Let's just delve into the impairments. That declined to 0.7% from 1.4%. Cost to income ratio came in at 52% from 54%. And interestingly, I mean, we've got to keep in mind that interest rate environments in Kenya is very high, also just keeping things relatively flat when it comes to net interest income. That rose around 4.2%. Are we expecting a better performance here going forward? Because we are expecting interest rates hopefully to come down sometime this year. Isaac, are you there?
Correct. But then again, we also need to consider the fact that high lending rates, yes, I am. We need to consider the fact that high lending rates are also not good for business in terms of growth of the loan book. And if you look at the Barclays results, there's actually an indication that at some point they experienced slow growth towards the end of the year as interest rates kept on trending upwards. And again, also, in addition to not growing very fast, you also have the situation of non-performing loans going up. So an environment of more stable interest rates might be better for the performance of banks than one necessarily of very high interest rates. So looking at where we are going and looking at the direction that short-term rates are taking, I think we might just be getting to that situation.
Yeah. So let's now move on to whether you would buy or hold or even sell Barclays Bank. It seems that most investors out there are saying that this is a hold.
Currently, I would probably look elsewhere because when I look at the numbers, I think in terms of earnings growth, in terms of growing their loan book, other than cost cutting, which worked on their side, there's a lot of retrenchment on their part. If you look at their key markets, if you look at, relative to their peers, some of their peers, I would probably look elsewhere in terms of, double-digit growth for that matter. Not that I'm saying that they're not going to perform well moving forward, but I think on a comparative basis, there are other places where I think you might actually get higher returns.
Let's touch on the shilling. We've seen quite a bit of strength coming through from the low of what we saw above 100 to the US dollar. Do you think that the time now is for exporters to sit on the sidelines and wait a bit, given the fact that there is weakness expected down the line? The central bank has done a lot to try and prop up the currency, and many say that this kind of level cannot be maintained.
Well, I think it all depends on how you look at the fundamentals at the point currently from here moving on forward. If you look at, let's say, the balance of payments, if you look at the other factors, the interest rates and of course also the level of inflation, then I think it also points out to a more stable currency going forward. If you look at where we are currently as far as the dollar is concerned, it's not very, very different from where we were before the rain started beating us. So I think looking at the macro environment, I do not expect a substantial or significant weakening of the currency. And I don't think exporters should expect another windfall as they saw last year, because that was by and large a very extraordinary event. And chances of that recurring are not very, they are quite low looking at where we are moving, assuming, of course, we are not hit by any external factors.